Ira Epstein with your Morning Flash update, and this update is for Wednesday. And we're here at the 2nd of February, 2022. I'm in a major snowstorm. The city itself is due to get about 10 inches of snow in Chicago. And by any stretch, even though we're the Midwest, that's a lot in a big city. But we had economic data today, and let's go to that, and then we'll come back here. The mortgage market headline, the MBA mortgage headline, you're looking at all categories. The index up 12%, the purchase index up 4%, and the refi up 18.4%. So the person that wants a mortgage, they've come back from vacation. They're taking advantage of the market. And you're getting a little bit more of a break. Over the past few days, we've been falling in yield, not going up. This number's an interesting number. ADP's numbers don't often agree with the U.S. jobs data that we're going to get on Friday. This was a blowout to the downside, not what was expected, not a bullish number. 301,000. They were looking for a job gain of 200,000. They lost 301. 274,000 came out of the service industry. So that's very important. You're seeing the layoffs from Omicron, the end of the holiday, people being let go again. That is the event there. But making matters even worse, the job gains in December were revised down a fraction. OPEC wrapped up its meeting just about an hour ago, and they're going to go for 400,000 barrel increase in March. Problem is they're not meeting those goals, and energies are higher. Tomorrow we get the Bank of England and European Central Bank monetary policy decisions. The Bank of England is expected to go with a quarter-point hike. Eurozone economic data. This is a record high CPI number of 5.1%. So they keep talking they want to be at 2%. They're over 2.5 times that almost as to where they're at. And I'm certain they're going to still say it's transitory. I don't think you're going to get the European Central Bank to do much. Yet the currency is up, the dollar is down, most metals are trying to bid. Keep your eye on gold. Closes here in the teens would be very friendly. It would be a reversal of this decline and putting the market back on track. So what's going on? Here's what I think. Bad economic data is suddenly favorable to the market. What do I mean by that? It takes all these hawks on the interest rate talk of 5, 7 hikes and pulls this back. Maybe the economy's not as good as thought. We have to get to the jobs data because the Fed will be data dependent, and we have CPI data next week coming out, so you keep your eye on that. As I said, this is a grain market that is just looking hard at what the weather looks like in South America, how much of a crop cut are they going to get. Now you're entering the volatile stage. You can go limit up, limit down. I know you're going to not believe what I'm saying. It can happen to you like this. Bonds and notes, they're looking at the data and saying maybe we shouldn't be pricing in as much as we are for those hikes that are coming. Maybe they're going to be a more gradual pace. You just don't know. But one of the things I do for you is I like to teach. So for those of you that like my chart action at the end of the day, why don't you learn to do it yourself? We have our charting course. The course is got, I'm going to guess it's about 7 or 8 hours of videos, giving a guess there. It comes with the charting software. It comes with the data that I use in the course. So you're able to go back, do the same things I do, and then I bring you forward because in the morning subscriber videos, I'm reinforcing everything you're learning on a daily basis. You're going to learn swing lines, Bollinger Bands, window envelopes, moving averages, and of course the slow stochastics, how to put it all together. 54 videos, about 8 hours. You can review them. It's not a race. You take it a nice, slow way. But what I think it'll do, I think it's going to give you a basis for your charting that is strong. And then from there, you start building with it, and you decide, hey, this is for me in this way, that way, whatever it might be. In order to learn more, and we talk about it on the website, just go to iraepstein.com, education. Where else would that belong? Take a look at it there. Hope you decide to take it. It works, whether it's in the futures, it works the same way in spiders, ETFs, and stocks. I'm Ira. You have yourself a good day, and I will see you all at the end of the day with our market review if I can get out of this snow and get everything shoveled. It's going to keep going for 48 hours. You take care.